Hey guys, welcome back to my YouTube channel. This is Matrixfx here. So today I want to make the last video for this series, which is the failed technique. So for those of you who haven't gone to the series, I advise you to go and start from the beginning to understand what I'll be saying. So I think I've explained the sweep technique in the third video. Now this is the failed technique. We'll be explaining everything you see here in the charts. So without further delay, let's hop into it, guys. So let me just close that and go straight to my chat. So I recorded the two videos the same day. That's why you see I'm still on this trade. So far so good with this trade. So I think we want to start the review. Some of you who watched the third video, you already know the failed technique when you see it, because I made a mistake in the other video by talking about it a little bit. So that was why that video was somehow long. So in this particular video, we won't be talking about it. We won't be talking about the sweep. So I want to make the video as short as possible. So let's go. Now, if you notice, the market trades the way it trades, sweep the liquidity, which is the liquidity sweep leg. Now, if you notice, the market started giving this price move, this move, or this move right here. Or this move right here didn't break structure. If you notice, that's why I didn't take this trade. This was just like I was just assuming that okay, had it been I took the trade, yeah, this is the outcome. So me myself, I still do back test, I still do log data. So it's not as if I am that much of a perfect trader that I don't do all those things. Those things are things that as a trader you're supposed to do. So now if you notice in the swing trade, in the field, provided this did not break structure, and even if it moved with a fair value gap, provided it didn't break structure, we haven't created the leg, the break of structure leg. So but if you notice, what happened here is the market did this. The market did this after moving all this, doing all this. It came back, formed a new high inside the fair value gap that was here, inside this fair value gap right here. So the market, after coming to make a high, if you notice, this high did not break this high. So immediately the market broke this particular structure that it formed there. Immediately the market broke this structure. Whether it broke this structure or not, that's not our business again, because the market has created a new structure for us, which is from here to here. So all we have to do now, since the market has broken the structure, we have to just flip this leg. So let me do that real quick. So think, yeah. Now all we have to do is flip this leg. So if you are flipping it from right here to right, I think, yeah, that's the level I was using. So my 50% was just here. Now if you remember what I said, somewhere inside the optimal trade entry, this is optimal trade entry, but unfortunately in this particular day I didn't really focus on the 1 minute chart. I was actually using the 3 minute chart. So it's the same thing. If you notice, it's the same thing. So clearly you can see, let me take this off of the chart for it to be clear. So after fibbing the leg, we now know where our fair value gap is. I think it was the 5 minutes I entered off of. Yeah, I entered off of the 5 minutes, but had it been used the 1 minute or 3 minutes, you can see how refined the entry was. So from here to here, after we fibbed that leg to get our 50%, we now know the fair value gap that we want to use. So you can see this fair value gap particularly has the 61.8 and the 72.0, which is the optimal trade entry, and this other fib level in it. So that is like other confluence, other signs that this particular fair value gap is in the right position to hold. So this is a form of inducement, but that is not the topic for today. So you can see also there is also a breaker block here. Wow, there are so many confluences to this particular level. I am sure I didn't even see this particular breaker the time I wanted to enter that trade, but either way the trade still went well. So you can see this breaker right there. So taking that trade just from here, I don't know why there are two. Why are they two? Okay, no, this is wrong. So I think that was like a re-entry that I got during that session. We're not talking about the re-entry today. So let me just do this real quick. So you can see this is a 1:3 RR. Like I said, I like taking partials at one. Immediately I take any trade and it gets to 1:3 RR, I do take partials. So partials is my thing. I do take partials. So once it just gets to 1:3 RR, I'll just take partials. So I'll be able to let the remaining trade run. It helps with my mentality, so I won't be paranoid or wanting to see what the chart is doing. Is my money increasing, is it reducing, stuff like that. So maybe I take that 1:3 off the trade. At least I take at least 40% of the trade or 50, depending on how big of the range is remaining. So maybe I take that off, my mind will be at ease. So the entry is right there at the open of this fair value gap. Now, like I said in the sweep technique, your stop loss can be here, because if your stop loss is here, what if the market comes, just trades through, fills in this fair value gap right here? You can see that there's a little portion of the fair value gap remaining. So I can't really draw a straight line with this. So there's a little bit of the fair value gap that is remaining, just a little portion of it. What if the market comes up, fills that, takes you out before going down? So you now start saying, it's village people did this, not knowing that it's not your village people. It's actually that cost it for yourself, because you were not being cautious of your trade and you were not following the trading plan. So that's why I kept my stop loss right there, just above the bodies of the candle. Sometimes I don't use the wick, sometimes I do use the wick, sometimes I don't, depending on how I didn't want it to be too wide. So I used the bodies of the candle. So as you can see, this is a bearish order block and I was expecting resistance should in case it gets there, but as you can see, it didn't. Just immediately tapped me in, it started going down, hit my TP of 1:3. I left some position to run, let me not lie. I think there was the ones I closed around 6. So the ones I closed around 6. Yeah, just around this time. I think around here, something of that nature. So it ended up playing a 3.66 RR. But anyways, it's almost the same thing. So it's almost the same thing, because this was like the main place I took, I think 80% of my position out, because I know that the market will come back to fill this fair value gap and I didn't just want to take the trade then, because it has already been too late deep into the New York session. And the time I took this trade was during the daylight savings time, so you can see now it's not the same thing, but then it was actually, I think 4. But now during the daylight savings, it was, I think this would be for like 4:20. So that's why the time shift is 3. So I think okay, as you can see, this is actually going back to the trace. I think I'll leave this just to get to this point before I take out anything from that trade. So another two, just let's look at one more before we end this video. So like I said, guys, okay, you can see I took a trade on this particular pair. So I took one trade before and it stopped me out. So this is just like me taking another one just to cover the loss, but I don't advise people to do that. I have my reasons. I was still positive that my confidence was right. I was trying to do an ultra tight stop loss. That was why it took me out, and you can see it was just like a 15 pips, but it's still 3 RR, so it is still the same thing. So it's still 3 RR. So that has covered the loss for today. I think here is the next one. If you guys that watch my video on the breakdown of this trade, I want you to leave a comment on what technique is this, so whoever gets it right gets a prize from me. So yeah, I think this is the one we are looking for. Yeah, this is the one we are looking for right here. The same thing, the field technique. So let's quickly go into this. Let's quickly go into that breakdown. So obviously you can see that this was the actual level I was waiting for, but the market traded through that level. Now this is why you need to, so as the market traded to that level right here, if you go into a lower time frame, you would think this has formed an entry for you. So that's why I said you need to confirm and wait for the entry. You need to wait for the fair value gap also. If you notice the move from here to here, there's no real good fair value gap to sell from. But immediately market got to this point, it started giving us what we want to see. As you can see, give us this. Now this is the sweep. This is the sweep leg right here. Now all these are just lethargic move because the swing low that we'll be waiting for is this swing low right here. I think let me go back to the 5-minute chart so that this will be clear. So wipe that off real quick. So like I said, this is the sweep leg. This leg right here. This is the sweep. This is the sweep right here. So this is the place we want the market to break. So had it been the market just came back and broke the structure immediately and retest, then continue going lower, that's when we know that it is the sweep technique. But in this case, it didn't happen that way. What actually happened in this case is that the market, after creating this, went higher, started coming down slowly, just like in the book, slowly. Then it created this, then this. Now the reason I took this level instead of all these other ones was that this one is the only one that swept some form of liquidity. So I was like, that has to be like an added bonus from the algorithm. So for people who couldn't see it, it would be very bad for them. So as you can see, after the market did that, just a little bit, tap a little bit above this level. So I believe it was, immediately I saw that, I was like, okay, maybe the market is sweeping liquidity. I think that is a sign from macro that the market wants to start rallying, and truly it was a sign. So immediately just swept this high right here, immediately swept this high right here. You can see what happened. It broke structure, and this was where I entered. So to show you that it hasn't even broken the structure of this leg, from this leg right here to this leg, it hasn't even broken that structure. I entered before it broke the structure. So let me just, so it hasn't even broken this structure. You can see it. I entered immediately. I saw, because I am sure of what I was doing. I was really sure of what I was doing. Let me quickly. So I was really sure of what I was doing. That was why. So you can see that, right? So you can see that right there. There's the fair value gap above the 50%, which is in the premium. You can see it above the 50%. Very beautiful. Above the 50%. And the fair value gap has the 61.8, the 72, and the 78.6, which is optimal trade entry, and the 61.8 level. So to me, that was like a high probable fair value gap, and you can see it tapped into the fair value gap. For those that will be using the order block for entry, it still tapped this order block right there and gave them a sniper move. So my stop loss, of course, when I took the trade, wasn't here. When I took the trade, my stop loss was just around this level. So you can still see it. It was a 1:3. But immediately I got this move right here, and I got this break of structure. I was like, okay. And I went to the higher time frame, and I noticed that immediately it did this. It broke the structure again. That's why I started following the trade. So immediately it filled in this fair value gap and broke structure again. I just took my stop loss down here, and I know that this level is safe because this level is actually a sweep, but I didn't recognize it at that moment. So that's one thing with price. You might not see it clearly at that moment, but later on, you now come back. I think it's in this video, when I was editing this video, I even saw it. So it was when I was making the video. So you can see I started following it. The market traded to this level, filled in this fair value gap, and dropped down. To be sincere with you, I opened this very small position here also with my stop loss just around this order block, and my target was still right here. So that one gave me 1:4 also. So I think I made around 1:12 or so, 1:12 that day. So you can see the market did the same thing, filled in this fair value gap, broke down, came back up, swept this. Now you can see this is when it was giving the same setup that we got in the morning. It was giving the same thing in the afternoon session. For those who missed it, swept this liquidity right here, broke down, filled in the fair value gap, broke down, filled in. There's a little very small fair value gap at that level, so the market filled it and went down. So that's all for this video, guys. If you enjoyed the video, please like and subscribe, and I'll see you guys in other videos and other series that will be coming out. So with that, stay safe, enjoy yourself, guys. Goodbye.